Modern Real Estate Practice, page 474. Math FAQs continued. What is the difference between prorating through and prorating to the day of closing? In a proration problem, an examinee will be told whether to prorate through the day of closing or to the day of closing. This is very important when calculating the days owed. That's all highlighted. When prorating through the day of closing, the seller is responsible for the day of closing. When prorating to the day of closing, the buyer is responsible for the day of closing. How do I calculate proration problems? Once the number of days owed is known, the amount of the expense or income per day must be found. Either the annual amount is divided by the total days in the year to get the daily amount, or the monthly amount is divided by the total days in the month to get the daily amount. Math tip. The correct type of year, banker's or statutory year of 360 days, calendar year of 365 days, or calendar leap year of 366 days, must be used when computing the daily amount. The final step is to multiply the amount per day by the number of days owed to get the prorated amount. What is the difference between debit and credit in a proration problem? To calculate a proration problem, it is necessary to know how expenses and income are posted on the closing statement. Debit, that's highlighted, takes money from a person. Credit, that's highlighted, gives money to a person. See figure M.3. When the prorated amount involves both the buyer and the seller, there will always be a double entry. For instance, the item appears twice, once as a debit to one party and once as a credit to the other party. If the seller owes the buyer, the prorated amount will be debited to the seller and credited to the buyer. If the buyer owes the seller, the prorated amount will be debited to the buyer and credited to the seller. When the prorated amount involves the buyer and someone other than the seller, there will be only a single entry. When the prorated amount involves the seller and someone other than the buyer, there will be only a single entry. The 5 questions to ask when prorating are: number 1, what calendar is to be used? Number 2, is the expense paid in arrears or in advance? Number 3, who has or will pay the expense? Number 4, who has earned or received income? And number 5, when will the expense be paid? Page 475. Figure M.3. The debit/credit flow. On the first tier, it says buyer and seller. On the next one, it says sales price. It's a debit to the buyer and a credit to the seller. Tenants' security deposits. It's a credit to the buyer and a debit to the seller. Fuel oil in tank. Debit to the buyer, credit to the seller. Prorated accrued water bill. Credit to the buyer, debit to the seller. Unearned rents. Credit to the buyer, debit to the seller. Tax reserve account. Debit to the buyer, credit to the seller. Different items are treated differently as credits or debits to the buyer or the seller on a closing statement. Utility payments may not appear on the statement if the utility provider sends a final bill to the seller based on the date provided. How do I calculate interest in a proration problem? When a loan is assumed or paid off, the accrued interest for the month of closing must be prorated. Interest is paid in arrears. Therefore, the monthly payment made on the first day of the month pays interest for the entire previous month. The payment includes interest up to, but not including, the day of the payment unless specified otherwise. Not all payments are due on the first day of the month. Therefore, attention must be paid to the stated day the interest has been paid through. The sellers owe unpaid interest, also called accrued, earned, or current interest, from the date of the last payment to or through the closing date. If the prorations are to be calculated through the day of closing, the seller will owe payments including the day of closing. If the prorations are to be calculated to the day of closing, the seller will owe up to, but not including, the day of closing. Remember to use the correct type of year. The banker's or statutory year of 360 days, the calendar year of 365 days, or the calendar leap year of 366 days. When a loan is paid off, unpaid interest is calculated and added to the outstanding loan balance and is a debit, that's highlighted, to the seller only. Loan payoff is the sum of the principal balance and the accrued interest. On an assumption of the loan, the interest proration is a debit to the seller and a credit to the buyer. For example, a home was purchased on April 4th for $110,000. And the closing was set for the following May 8th. The buyer assumed the seller's $93,600 loan balance on an original loan amount of $96,000 with 6.5% interest and monthly payments of $612.62 due on the first day of each month. How much will the interest proration be using a banker's year and prorating through the day of closing? Who will be debited and who will be credited? Banker's year / statutory year. Step number 1. Find the exact number of days of earned or accrued interest. The seller owes 8 days, May 1st through May 8th. Note, it would be 7 days, 8 days minus 1 day, if the problem had said prorate to the day of closing. End of page.